All right. Hope everyone's doing well. Thanks for tuning in. So interesting times right now. We're seeing a global equity sell-off right now, and I have some ideas. I mean, it's very hard to pinpoint. I was watching Bloomberg as well, and all of them, no one really has a clear, definitive answer. So I think we'll probably get some information on that soon. But I think for the most part, I think it's just a couple. It's not just one factor. I think it's I would say the main sell-off came from one factor, but it was also sort of that factor was more so like possibly a confirmation on a prior factor, which is the Fed hawkish tone, right? We know that the Fed is a little bit more hawkish. If you guys read the economic projections by the Fed, definitely, their focus is on combating inflation. They revised the PCE numbers recently at 3.6% from 3.3%. So obviously, you're not just getting inflation from headline, which is 4.2%, but we're getting it from, the core side as well of the consumption of the consumers, which is a very, very important indicator and the preferred indicator by the Fed. And obviously, 50% of the committee is looking to, according to the dot plot, is looking for a potential hike at least this year. Traders are also pricing that in by September. So we're seeing that shift of sort of geopolitics easing, right, with a deal potentially in place, and we're seeing sort of that that hawkish, restrictive dollar. Okay, and we can see that right here at the top chart, US yields and the DXY 2-year yields specifically, by the way, and the DXY is actually taking the strength today. It's been taking the strength for a while now, since I want to say this was 17 July, right? So right, just I want to say, I can't really remember where else FOMC date was. I think it was either the 18 or the 17. But anyways, that's when the DXY just really started to push higher here. We see gold a lot weaker. We see obviously Nasdaq down with the global equity sell-off. And the other thing, right, is I believe that it possibly could be a link to the BOG intervention. I think Financial Juice came out with this saying that it's a suspected yen intervention. I don't know whether that's really the case, because I think it was around this candle right here during New York yesterday, or during New York time. And I don't know. I mean, the previous time we had intervention was about 500 pips of a drop. So I mean, we'll see. But I think that has a little bit to do with the unwinding that we're seeing global equities. Obviously, as you guys know, the yen is a big, a no-brainer kind of domain name for carry trading. It's a very big funding currency. What that means essentially is a lot of traders, investors are actually borrowing the yen because of its low interest rate, converting it to whatever currency to then invest in that particular market, be it the US, UK, other high risk but high beta names, I guess you can say. And obviously, a lot of that is, there's a lot of leverage, there's a lot of borrowing that obviously trickles down to the AI side, and we can see that when these things unwind, right? When the credit is unwind, when the yen is unwind, then that would also lead to unwind in everything else that they're investing in, right? It's pretty simple. And I would say that that has something to do with it as well. Now, do I think that the bubble is bursting? No, I don't think so. Obviously, we see a strong sell-off in the AI side, but I don't really think we're at that level right now. Stocks are still really strong. In terms of earning growth in the tech side, 92% of stocks beat earnings. Earnings forecasts, I don't really see that. I think it's just a quick unwind, and I believe we probably may rebound unless the Fed comes in with something else or inflation starts to become a bigger problem. We see headline inflation suddenly go to 5%, or worse, even 6%, which is essentially insane numbers. I think the highest inflation number or headline inflation number we've got was somewhere within 2021, end of 2021 or 2022. I think that was like 9 or 8%, something like that. Correct me if I'm wrong. So that would be very, very close to that. We're very far away from the Fed target, right? And obviously the Fed, so that's, worst case. I mean, that can really bring stocks lower. And then coupled with, if the deal doesn't go through with Iran and US, that's another huge indicator. I mean, that's just going to add more pressure. Or obviously, most importantly, corporate earnings, stocks earnings are not doing well. They're getting affected, which is a possibility as well. If we're seeing high inflation, high, then potential hikes, if let's say really we see growth start to weaken, then that's really going to affect stocks, obviously, right? It's going to affect stock earnings, then that's going to affect stocks, and then we may even see a crash, right? We could see a, maybe 15-20% crash. We'll see. Anyways, but that's just hypotheticals. That's if it happens that way, but we're not really seeing that right now. So we want to see what happens with the future data, right? And future stock earnings. But so yeah, I hope that makes sense. I tried logging the UK, the FTSE, I mean. It got stopped out right here, but now we look like we're actually rebounding. So interesting. And also one thing to add is that the FTSE is actually one of the lower down, or lower, I think the lowest actually out of the basket here that I have on the indices. So I have the Kospi, Nikkei, China, all these guys taking the lead. We have Nasdaq, Bitcoin, Russell as well. Interestingly enough, not really very strong of a drop here. S&P, we have the Dow, the Australian index, the German DAX, FTSE being the lowest here. Why, right? So let's just kind of bring back to the macros, right? So macros plus the political landscape. So as you guys know, Keir Starmer has already resigned. Andy Burnham is the new UK Prime Minister. I believe that whole process is going to take a couple of weeks probably for that to happen, but that's a confirmation already. And what we can see is that from the FTSE's economic, I mean, if we took a look at the UK data, we can see economic growth actually taking the cake here, right? Manufacturing PMI, services, retail sales, consumer confidence being really bullish. We see inflation as well came in softer than expected on headline. We see unemployment rate also coming in a little bit soft. So we do have some strong fundamentals here for this to actually go higher. Now, obviously, when there's an unwind, then the fundamentals don't matter, right? But it seems like prices might start to rebound here. Now, whether these are shorts covering, we don't know, right? I'm not too sure. So I definitely want to see how price reacts from here, right? Right now, I do like the fact that we're above the session VWAP. I would like to see how price reacts to that session VWAP. If we do see price actually start to rebound from here, I may actually take a step long again, right? And obviously with Andy Burnham, I think the market is actually looking at this more or less quite positively. I think for the most part, whether companies and corporate firms see the same, it depends. But obviously, if markets or people are actually quite positive on Andy Burnham, I think for now they seem to be, that it does help in terms of the sentiment, right, in some way. So I think that's the reason why we're not seeing really the FTSE have such a strong backdrop, because we have more or less pretty decent macro strength. We have also some positiveness maybe coming from the political landscape, possibly, right? I mean, there's still a lot of uncertainty. I think for the most part, um, there's still a lot of things that are not really confirmed. I don't really check too much on the UK side. Obviously, I'm not really a big political guy, but I do know that I don't think they have like a team in place. Funding is also a little bit there's a little bit of a cap there. They're not sure on that. I don't think that there's tons of funding coming from their party. So I mean, a lot of these things are going to come into fruition, and obviously we'll see, right? We'll see. But for now, it seems rather positive, I think. So let's see. Let's see what happens here, guys. I don't mind trying out again on this FTSE trade. I'm still in my gold trade. I actually just took another scale in. So I do hope to get another scale in if I can. I'm not gonna lie, because I really, really like this move. I like how price tapped into the 20 moving average and then had a nice sell. Obviously, I'm still quite dollar bullish, so I'll be happy to take more shots into this pair. I would say that if I do take another scale in, it probably would be my last scale in. And I'm just gonna let it run and trail my stops. So if let's say we do see price start to push again, I'll take one more scale in, and then from there we just let it do its thing, right? So I'm still in a nice profit on the short, on my initial short here. Have not covered it. Don't think I'll be covering until we see my stops get trailed, right? So essentially what I would like to see is we see another sell-off. I would not mind trying to get in again. And then let's say we have another pullback and we start to push off, then I'll start to trail my stop. So the trades will more or less be break even. My initial trade will be in profit. And then in a perfect scenario, if it keeps doing this, then I keep trailing my stop, and from there, I just keep trailing my stops, if that makes sense. So where would my last target be really depends. It really, really depends. For now, I'm probably looking at the weekly moving average. I think gold has been really extended for a while now. And with the dollar bullish scenario, I do think that we could get a little bit more of a pullback, maybe to the 100 moving average before possibly rebounding. So that may take some time, right? I mean, we might take weeks to get there. So let's just see. I mean, like I said, if my trail stops do not get stopped, then I'll just keep holding onto the trade. Let it run, right? Why not? Right? Let it run. Um, I'm not using very much margin on this as well. I think I'm only using roughly about currently 1.53%. I mean, that's really nothing. Okay, so still have tons of margin to play with. So we'll see. We'll see what happens on this particular trade. My Euro USD short is I've already covered it. Obviously, excuse me. Definitely feel like, in hindsight, obviously, it would be really nice to just keep holding on to it, but that was the plan initially. But I don't know. I decided to cover because we already actually at that 114 area, and that area is actually a few bank targets to cover the short positions. So I decided to just get rid of it in case if we do get another pullback, then I wouldn't mind re-attacking short, but it doesn't seem like it's happening at this point. So, but for the most part, I'm up 9R for this. So this is really, really solid trade. Great trade. I believe FOMC was Thursday. So FOMC came in really, really hawkish, and that just tanked the euro dollar. So yeah, and at the same time, I was also short XAU during that period, I believe, but it was after the FOMC. So yeah, okay. Anyways, that's that. By the way, guys, it's not financial advice, so just trading is risky. If you decide to follow the plays that I'm looking at, that's entirely up to you, right? Please manage your risk. Don't full pot. Don't be an idiot, right? And yeah, all right. Anyways, cheers, guys.